Happy Friday, guys. Good morning. What's going on? Welcome to the what the hell's going on here with these numbers kind of Friday. And actually, what the hell is how do we get these numbers so wrong? There was an expected 1 million jobs added estimate and we added 266,000. What happened? This is worse than this is quite literally worse than earnings expectations being completely off. Um it's it's very interesting, and it does add a very this is where you everyone's got everything sort of figured out, what we're doing, got our timing down, how we're sort of positioning. Yesterday obviously I kind of went on a tangent about trading through equities in a little bit of a different way, and then again, due to inflation and seeing how well the economy's doing, and so what we're doing is we're shying away from bonds to go into this very it's not as risky to go into equities, but you're going on this risk on mentality, and you don't need to hedge with bonds because bonds again will be negative compared to inflation. And so instead you can go through this derivative and value approach and use growth as sort of this further risk, and use derivatives as this constant return as you would with bonds. And so you have this sort of nice hedge here. This doesn't change that, but it definitely changes our short term, because what's going to happen as soon as this happens? Well, growth is going to explode, which is still great because we're obviously trading through mega caps. And so that's still a part of that exposure. But the difference here is that when you get numbers like this, it causes this bond market thing to snap back a little bit. And so if you look this morning, what's happening on the bond market, you're going to have buying on bonds this morning. And so you have yields going down, right, this morning. And so now we're doing this again where the time has it's not shifted, but now we have buying in bonds here, and we're having buying again in growth. These things are not very well correlated. The idea is correlated, but again, we're buying for kind of this idea, but we know it's not going to stick here. And so it's like this very strange volatility that causes further upside and further spending overall. And there's obviously this need and want to have the economy not doing as well, because the longer we stay at zero interest rates, the further this shit just kind of continues to bloat on the growth side, right? It's just this constant consistency of an idea that it's been a very long time now, right? That we've been sort of on this whether we want to call it a tangent from the norm with COVID, and how it's sort of it's pushed growth past because it continues to do very well. Uh, it's just it's very strange. It's very strange, is to say the least. And so we'll have to see what happens today. I mean, we're seeing mega caps fucking explode, which again is what we were trading for, through this idea that mega caps are the ones that will buy back. Those are dividends. If a company buys back stock, that's a dividend. And so we wanted to trade through mega caps, and so we're getting these moves here. But we're even seeing things that were completely wrecked now getting bid here, which does throw like this wrench in of what are we doing here? Because uh, this is the story of, do these job numbers mean anything other than there was obviously some error here, but do they mean anything? Because of what if the next job numbers do add a million and a quarter jobs, and the economy is getting we know the economy is booming right now. And so how much time does this take off? And are we just trading in the moment? When you see the numbers this morning, what is this reaction here where you're putting a lot of points on some of these tech companies and things that have been getting beat up, right? Just let me put it into perspective. You look at something like this, and now you're opening 7.5% higher. What is that? What is that reaction? That seems like quite the knee jerk reaction, which as soon as the numbers come back, it's going to come back down. So in terms of our positioning, I don't know how we attack some of these things, and whether we can or not. So let's stick with what we're doing and let things digest a little bit, because It's pretty random. Let's just be honest. It's pretty fucking random. We get last week's numbers on Wednesday of consumer spending is extremely high, right? It's snapping back. We gained like 10% overall on spending. What are these numbers, right? What are the numbers? We just had a report saying how New York is hiring more people than ever and everything else. I'm not really sure about all this. So, and then also the reaction, because it's like the reaction is the reaction you'd imagine, but it's everything is continuing to trend to the upside. Again, it's not like we're losing points anywhere, right? Everything is just gaining together. What are we doing? So today is now going to be a lot of fun. It's going to be a lot of fun, and so we're gonna just kind of sit back in our positions. Those of you that got big gains on mega caps, um, you're now basically set on a lot of these positions, right? We've talked about buying down here and trading through megas. This this certainly helps. And the thing is, they don't. It's not like they're going to get affected negatively when we start to sort of. I don't want to say like trend back to the mean, but when we sort of get out of whatever this just event here is, once we get out of that, it's not like these are not going to come down, right? If yields start to rise, we've already seen that if yields rise, growth is not going to come down. It's just the way that we're positioning in portfolios and everything else, right? And so it's going to be interesting to see how much buying happens today on the growth side. There's not going to be any there's not going to be any selling on, for instance, the value side or something like that, right? We're seeing banks take take this temporary reaction. We'll see how that resolves itself today. But again, we're sort of trading. We're trading an event in the short term here, creating short term volatility. How much does it matter in a week from now? Probably not much, right? But there's certainly something up with the data. We're gonna need to hear some. Obviously, we're gonna need to hear something. It's kind of it's not very good to be surprising the market, and we talk about this a lot. The market doesn't like to be surprised. We like consistency, and I just talked all yesterday about buying things that are consistent. This does not help with the consistent argument at all. So I would love for us to hear something from the government or something. Somebody come out and say something about why exactly we had no fucking idea what is happening in this country. What other data is fucked up, right? Uh, maybe we'll hear something. Yellen was pretty quick to rescind her comments, so maybe she'll come out and say something. So we'll see. Looking through pre-market action, the travel side is going to be interesting here because again, we talked about all these sort of tickers rolling over and being really negative, and we don't want to touch anything with volatility. With this volatility here, it might be possible to take some risk here and push trades over the weekend on the travel side. We've already sort of taken some of these trades that are less volatile, right? Let's maybe keep an eye on these and see how these react. There's not much movement overall, but we have seen that when sort of these intermediaries I've talked about, the service providers, things like T-Com, Expedia, when those get going, usually the rest of the sector follows. Keeping an eye on something like that, that's something that's tangible that we can actually trade in a pretty nice way. So watching things like that. Otherwise, there's probably nothing to do today. I'm probably not going to be on here for very long. From yesterday, setting up just kind of this very again value centric portfolio with mega caps and thinking about those companies that can do buybacks for the derivative aspect and the derivative companies and companies that may be able to provide dividends or buybacks in the future, and sort of trading through that, which is why we saw the Dow have basically the craziest day, going through all-time highs. It's opening at break even this morning, which technically you should be taking profit on this somehow. That doesn't look like it's going to happen, even with the news here from this morning. Again, this is basically the model for a portfolio right now, I would say, and today is not going to change that or something like that. We're just trading in a short term sort of way. And so just being fully positioned through this is the way to go. And so again, this is really what we're going to be looking to do. We're going a much longer term. Going to be when I talk about taking risks now, it's going to be things that, again, like I just said, with maybe this travel idea over the weekend, harnessing some of the news here that we just got, and seeing how now there is a lot more to recover if the numbers are like this, and using some of those ideas. Otherwise, keeping everything very, very much tight to this idea of trading on a balanced sort of portfolio with value leading it, and hedging with growth, and growth hedging with value, and using derivatives for constant return. That's going to be it. And so it's not going to be it's probably not going to be as snazzy from here on out until a day like today happens. So we're going to sit back, relax, have some fun watching people trade whatever these numbers are. So what's funny though is you have this downward move on the dollar happening, and then news comes out, and so now we're going through the motions of, so are we downtrending? Are we buying bonds? What are we doing? Like, are we losing value? Are we just losing time? What exactly do we want to do? I'm not sure how much any pre-market price action here matters. So even on the mega cap side, some of those numbers, I'm not sure how much of that sticks. Same with banks. I'm not sure how much of that sticks. And this is also where buybacks come in. And so when you look at some of these numbers, you look at some of these numbers and how well some of the recent move has been. This is just, it's a complete opposite. It's the complete opposite if the numbers are like that. And so Goldman, for instance, opening a 1.5%. It's only a 1.5%. You did almost 2.5% yesterday, right? It's barely a blip in the overall move of the week. But how much do these banks look at this as they don't want to lose? They for instance don't want to lose that move that's here, right? When you look at the overall, you don't want to lose this move. How much of this gets bought, right? We're not even erasing yesterday's gain from the average, but how many banks go, let's buy this here and maybe stabilize it? And this might be a good test in some of these areas, and see if maybe we get some buybacks to come in to sort of hold any volatility that comes in. And so maybe today we can learn a little bit about some of these ideas, and possibly you know, get a bit of a timeline on exactly how we should be transitioning if there are events like this, and these things are going to happen in the future again. I don't know if these numbers are going to be this bad, but of course timelines will change in the future of exactly when interest rates will rise, and so maybe we'll have an idea of exactly when we should be taking profit, transitioning that position. So we'll see if we can get any of that information here today. But yeah, what a very funny day so far. Obviously, we've been trading a little bit through gold using the commodity super cycle idea. Posted the gold chart for the bearic chart just through miners. Usually trading through JNUG, and we have some of the other ETFs, right? However much this is gonna move. I mean, again, now this makes this idea of trading through commodity, it makes it very strange. Again, we have like we're trading something for one reason, and then you get these, and now it's like, what are we trading through? So even on the commodity side, trying to follow the flows here is going to be important. Again, tie it with the dollar, and so maybe again, I don't think we're going to realize anything until close. So we're going to need to wait on a few things. But again, this is where you shouldn't touch any of your. If you have a portfolio, you're in mega caps, don't touch them. You're in value, don't touch it. There's nothing to really do here besides maybe taking some risks on price action that has no idea what it's doing or where it's going, right? I mean, there's a lot of things that haven't budged, and that tells me if something hasn't moved, that people really have no idea what to think. So that can lead to some interesting lunch action or something like that, right? That's what we got, folks. That's what we got. And I mean, it does it does actually help with our weakest part of the market. So think about it. If value stays break even today, doesn't even take profit from the monster day yesterday, that brings the SPY right up to all-time high, but really importantly brings the NASDAQ back up from this low, which this was the weakest part of the market. And so this technically only helps equities, but again, it does make it doesn't fucking add up very well, right? Our markets love when more people die and when the economy is not doing well, right? We're very backwards. We're very backwards. We get scared when the status quo of everyone being stuck in their house changes, right? And we're trying to price the difference of that, but then we get confirmation of no, we're all waiting and still trying to figure it out right now. You can tell. Look at the VIX. Nice. Good job, guys. Nice. Volatility's down on the morning, just to let you know, because we're going through all-time highs. The Dow is leading the way, so we'll see. Do we have anything else yet? Let's see. Waiting for someone to come out and correct the numbers. Haven't seen anything yet. Probably won't. Probably won't. But overall, Europe's having a good day. Value's trading very well over there. Asia had a mixed day. They're hanging out again. They're gonna have a great time now that they see the jobs numbers. So, um, there's not much to see, guys. There's literally not much to see. Oh, maybe we can talk. Maybe we can look at the energy a little bit. This move here again from the last 2 days is adjusting it. It's holding it. We've lost only 1% so far, and this is moving on its own without crude. So crude was coming down yesterday, and we continue to push through on the energy side. So there's an expectation that we're holding this trend here. We'll watch and see how this changes. And again, it has nothing to do with jobs, but again, people are now buying different things, which changes flows and everything else. So that's that. And this pharmaceutical thing again, we haven't heard anything new about the pharmaceutical thing and what exactly is going on here. So I haven't touched anything here still. Again, it's a debate that needs to be had about whether whether this temporary IP sort of lifting and letting others produce under some other company's patents is going to continue into the future. If it's really just temporary, I mean, it's hard to tell. Are these the price action here, is it an overreaction? Because, for instance, Moderna, are they going to make less vaccines? No. Are they going to make less profit? No. So what's the point of the price action, right? And that would, again, stipulate that the price action here that was heading to the upside was for future growth, not for the current situation. So, again, this price action could be completely wrong, but I don't think we have any understanding to take that trade confidently. So, if you do, then you can certainly take that and be like, well, that literally makes no sense. So, which is what I think. But again, it doesn't matter what we think if the rest of the market is pricing it differently. But Moderna is back up to 165 this morning, so it's entirely possible you get something here, but it could blow up over the weekend. So you get more information over the weekend, and it's hard to tell what's going on here. I don't know how much this affects with sort of today's and today's news, and whether or not there's going to be some like questions over numbers and in these different things. But the pharmaceutical thing is still going to be a little off limits for me, just straight through the normal healthcare sector. So I'm still watching it. But now we're watching things continue to climb. What a strange day. What a strange day. Let me turn this on to pre-market. Let's see. Let's see how quickly banks come back off this. It's gonna be interesting to watch through what we went into all time high yesterday, because I'm pretty sure we were set up for a very bid day today. So I'm wondering how bid we're actually gonna go here. Every single time this has happened in the past, we've bought a lot. I'm talking like what we see on the mega caps right now is a shit ton of buying. I'm wondering how much we're actually gonna buy here. And we're up 1% gap. Are we gonna fill the gap at the open, or are we gonna go bid from it? That's the question. This makes options that are expiring this week very interesting. Because now we have all these, again, we all bought this kind of this low here, so there's a lot of calls here. There's actually a ton of calls here. I wonder how much this move here is going to really fuck with things, and things are going to get squeezed. Like we've seen this on Apple before when weeklies are expiring and there's any sort of move. Now all of a sudden this turns into a shit ton of momentum, right? It's disappointing because only 266,000 people started working again. It was supposed to be 1 million. And we added 770,000 in March. So 770,000 people went back to work in March. So we were expecting 1 million in April, except it was only 266,000, which is fucking completely off. that's that's not even close. Like it's literally not even close. And it's not even just the expectation. It's not even close to what we added in March, which makes almost no sense because all of our economic data right now shows increased spending. It shows the economy just fucking booming. We thought everyone was going back to work. We had New York job numbers coming out showing everyone started working here in New York. Just talked about it this week, right? And now today the numbers come out. It doesn't make much sense, right? And so leisure and hospitality added 331,000. We added more in leisure and hospitality, so here in New York, but we only added 266 overall, which means we lost a ton of jobs in other sectors, which is fucking, that doesn't make much sense. We added 331,000 in leisure and hospitality, but we lost jobs elsewhere, which is that's not good. And we also didn't add in other sectors either. So, these are, it's kind of a very strange thing because that's quite literally what the Fed uses. That's their mandate is low unemployment. Now unemployment's at 6.1% again. And so this is where when we talk about inflation, but not so much inflation, but when we talk about interest rates rising, the Fed will do it when they meet their mandates, which is to get inflation over 2% and for unemployment to be basically, it's going to need to be a pre-COVID level, which will be in the 3%, 3.5%, this like area that is about half of what we have right now. So we need to about half the people that are unemployed right now need to go back to work. And so this completely changes the trend and the timeline. And it's the surprise factor. It's a surprise factor. And then since it's such a surprise, it's going to cause the equity market just to fucking buy more because there's nothing else to do. There's literally nothing else to do. They're going to buy bonds real quick here. But again, there's nothing else to do. And so now you're going to like overbuy on growth and we're going to do the same thing again, right? We're going to keep doing the same thing. And so who knows? The weakness is totally baffling, said Thomas Simons from Jefferies. But Nasdaq's up 1.5%. And everything else is holding from yesterday's all-time high rally. While we buy bonds, by the way, and Europe goes fucking bid. So again, it's almost like nothing fucking matters, and normal people will be out of jobs, but here we are, quite literally just blowing through all-time highs again on the market. Like it's just so fucking backwards. So it's again just keeping the status quo. The longer we don't go back to what we call normal, the longer we can keep fucking just going ham on the fucking equity market through growth, right? And also it doesn't change the value trade. That's the funniest part, is the longer we're being beat up, the more it makes those value trades a retracement trade, and in a trade that we're trading in the moment, and causes more fiscal spending. And it's again this kind of, it's no matter what happens, it's fucking bullish for the market. And that's what I was talking about yesterday, is that when you trade through the equities now, you're getting exposure to every positive thing, and every negative thing is a positive to the other side of the equation anyway. So it's like this shit, we just got the most surprising numbers probably in quite some time, and it's causing the market to rally more, right? Which doesn't make much sense. So, but it does in this market. You use some old quant strategy from 2 years ago, wouldn't do very well. In the new norm, oh, phenomenal. It's very strange. What I would love is that in about 30 minutes, like around 10 o'clock, we're going to get a revision, and it's going to be like we added 1.5 million people. It'll be some, I mean, who knows? Who knows? Dow's about to go back to positive, so there you go, boys. See, watching the banks. I mean, JP Morgan was down about 2%. Now it's at 1.8. It did 2% yesterday, so it hasn't even removed it. But we know that Bank of America bought some 2 days ago. They bought back stock 2 days ago. This move here doesn't look as much like the other banks. It may mean that we have some buying in pre-market. It's hard to tell. But I think we're gonna be hit with some fucking fireworks here to start the day. So let's see what we get here, folks. I mean, yesterday was awesome, phenomenal. It's just gonna be about seeing the trajectory in here, and whether or not we go. You do one of two things. You either buy the shit out of this right now, which again we're rallying to all-time highs. We keep buying, or we all just do nothing, and everyone just sits here. No one's gonna exit long positions. So you either sit here and the market's gonna flat trade and do nothing all day, or we're gonna buy the shit out of this. And pre-market so far has said we're gonna buy the shit out of it. So again, being in position, best day to buy was yesterday. And by yesterday I mean a year ago. But what do we get here? And some of these numbers are fucking impossible to even look at right now. So, what are some of these numbers here? Maybe we should watch the 5. Let's put the 5-minute on here. We're a little bit more time sensitive on price action. Gold continues. I mean, Nasdaq is up. If that's gonna hold up there, that's already a great day. And so does make these things interesting. And also, how do some of these other things that are tied to government spending, how do people want to trade those? Like things like industrials. How much does that matter? Everything is bid. Some of these moves are ridiculous. Not seeing any further downside on things. But some of these moves from some of those growth companies that we saw just kind of being removed as more mega caps got bought on the growth side, they're definitely catching some bid here. I mean, some of these moves are ridiculous. I don't see those lasting though. I just don't see it. Like net put 10% on so far. I don't see it happening. Quite literally don't see it happening. I think it's going to consolidate down there. I think it's just somebody. I think there's trading that's getting overreacted from news, and then it's going to go back to what we were doing yesterday. Continuation from yesterday. I don't think any of those orders change, and I think they're happening right now still. It'll be nice to get the bump on semiconductors, though. This definitely helps with that because we had that move slowly coming out of that low on semiconductors, and it's not trading as quickly as mega caps, but not trading as poorly as some of the other shitty growth tickers. Today will definitely help by just pushing that up just enough to get the momentum back over there. It does help us a little bit. Got a little lucky on that. Let's see if we're coming off this low here. We came back to yesterday's close a little bit, and we'll see here. Well, looks like the exact same orders are going in on the Dow, so that is still happening, FYI. Same orders. Again, it's gonna be a question of these banks coming back. Energy's coming back right now. It's quite the dip. Let's see how fast this bank move happens. If the spread's pretty wide. Spread is pretty wide. Yeah, it just did 1% in 5 minutes. That shit. I mean, that's obvious right there. That's completely obvious. What a silly day. Completely silly. Does I mean I don't even. We're just continuing from yesterday, but we had the pre-market action. That was it. It's almost, you know, I don't know. Dow's back to all-time high. The Dow Jones Industrial Average. Fucking nightly news. Out of my mind. How fucking silly. I mean, who gives a fuck if they didn't go back to work? Jesus. Wow. That's just disgusting. You ready to do this for the next year, boys? That's what we're on. See how quickly this we'll see how quickly these bonds move. It would be nice to keep some people in there. Because again, if too much sells and the yields fucking jack up here, that's not a whip. that's not a whipsaw that we're gonna want this morning because again, now all of a sudden, if these bonds whip back on yields, everyone that just bought bonds at like 8:30 and an hour later, everyone fucking sells the exact same bonds, it's going to cause this to come down because again, it's the now you're transferring volatility over here and it's going to take a moment. So things are going to get really fucking wonky. Like I'm talking value will explode, tech is going to sell because we will react to it because this is like such a raw sort of situation. So this is where things like net that I talked about, if people start to sell bonds right now, this shit is going to come back to where it was yesterday. Because again, we just decided yesterday that we don't want this junk. This is not the shit we want. We want the big boy companies, right? So let's see how quickly this changes or not, right? It would be nice to not do much. Trade through growth, bring some of the growth tickers back a little bit, because again, mega caps were pretty far down off of that tech selling, and this is again where you can see how kind of how sensitive we are to so many different things and how volatile we actually are, because we just had a tech sell-off from a fucking comment from Yellen about interest rates coming back sooner than we thought. And now today, a few days later, we get job numbers that are terrible. And so then tech explodes. Like we're so sensitive to every fucking thing that happens. So these things are, I would say volatility is climbing higher and higher here. To see something like this and to quickly just to fucking pass it off as if it's nothing, like it's good for us, but I mean, how good is it for 2 weeks from now? The longer you look in the future, the more volatility there is. If we have a lot of volatility right now, I'd hate to see what happens when Biden fucking makes uh, an unexcused comment, an accidental comment. Well, a fun day. I mean, I guess we're not gonna. If we're given gifts, we're gonna take them. Thank you. Yes. Thanks. Thanks a lot. I mean, this saves the semiconductor plays. It saves these ones. We'll see. I mean, I wasn't so sure yesterday. I feel pretty good now. This is just so silly, guys. I mean, it's just so fucking silly. Look, I mean, fucking Dow Jones. Not much to be said. Not much. We've already put on 20 basis points on the Dow. uh, look at this move. That's called buybacks. That's a buyback. Oh, we got a little bit of volatility here. No problem. No problem. Back to break even. Yep, 10 years about to flip back to the positive side. It's going to be fun. That's going to be fun. Oh, Screw them. Tell us whatever you want. This is also where, again, you get this feedback loop where people aren't going back to work, and then the equity market keeps rallying. It's still it's going to cause still this reverb in the actual economy. Whenever the equity market's going up, we have correlation that the economy starts to pick up as well, and vice versa, right? And so just like we've seen manufacturing needs to pick up now, it's these same ideas will cause that labor market to come up anyway. And so you can see how even banks, they're like, no, there's no weakness here. Doesn't matter. That'll just mean there'll be more jobs next time. Like this sort of reaction that we get is this kind of promise of equities in this market really holding everything together. Something to ask yourselves that I was thinking about last night. Would we have introduced as many fiscal stimulus packages, fiscal spending with infrastructure, all these things, if it wasn't to cause the equity market to continue to go up? Every time there's weakness in the equity market, we release a stimulus package. We release a new fiscal spending plan to keep the markets happy, right? Is it to help the citizens and help our, you know, normal everyday people? Or is it to keep the market fucking rallying? Which one is it, right? Who's benefiting more? The citizens here or the companies in the market, right? Who is the Fed helping? Well, we know the Fed is basically the largest cause of uh, inequality in the world, economic inequality, by what they do. It wouldn't be that far a cry to say that every fiscal plan is basically it directly helps the markets more than everyday people in terms of monetary value. At least in the number. Everyday people get $1,200 checks. That is what, how much of a percent of net worth is that? And then how much of a percent of net worth did we get from the market? Significantly more, right? It directly helps us. Bad numbers means more good for us. Means bad for normal people, means better for us. How far are we from S&P all-time high? We're here. Welcome to the high, boys. Are we? Well, let's see. SPX. We're right there. All-time high on the S&P. Okay, there it goes. There we go. Dow is, I mean, we're about to get 0.5% on the fucking Dow in 10 minutes, so. Good job, boys. Good thing we told ourselves a lot of stories yesterday to sit here and just watch our positions go. It's happening. Like, it's actually continuing to happen, which is exactly the point. Through any volatility, any surprises, no problem. The other part of my equity position hedges it, no big deal. Oh, by the way, that SDC position we had, let's see what we do here today. Excited to see. Coming into the weekend. Looks like we got a nice low. Nice low. AMC and GoPro are the other sort of silly trades down here that are actually working pretty well. So these were pretty good. What do you guys think? You guys remember those trades or no? You were sleeping? Those three are cute for sure. A little over 12% on GoPro this morning. AMC is 6.5, and SDC is basically for next week, but we'll see how it performs today. Those were kind of the meme economy trades we took that stand out a little bit. Yeah. A clean energy move from this news. Yeah, I'm not sure how much that sticks. Not sure about that one. I'm not gonna touch that one. Well, if you didn't believe me yesterday, I think you believe me now. The old nightly news. Can't wait to watch the nightly news tonight and tell me how my Dow ticker did. So waiting for BA. I added a couple more aerospace defense last night. See how some of that works again. Whoops. We'll see. We'll see. Bunch of moves so far. GM also being down 1% here is interesting because it's all pre-market. All pre-market. Again, trying to, I mean, this was a breakout from yesterday, but also trying to direct our attention towards larger blue chips that can offer what we're looking for here. GM would obviously be a candidate for that. And so taking the technical trade for entry and then using that idea for long term makes sense. TTM is the exact same idea, a little bit larger. These ideas, a lot of them are going to flow. Some of you, I don't know if you guys saw the ERJ chart. This is the weekly chart I was just talking about the other week or a couple of days ago that I didn't end up posting. This is from last Friday. And the move yesterday basically solidified to me that we were looking for that large upper wick candle, broke from the Friday. Now it's continuing here today. These kind of ideas. Again, this is aerospace and defense as well. We've talked about this chart in the past. This kind of thing, again, I have a pretty ridiculous, target here, you can say, and it's over a long period of time. This is 59 weeks. But I'm just trying to show it's not that it's going to take 59 weeks. It's the idea here that here's what we got. I think it speaks for itself. And again, there's a sector idea here and a value idea, and not asking for much. Looks like it. Oh, nice start here. Hey, hey, hey. Anything now? Holy shit. Interesting bond moves. Look at this move on X. This is funny. Again, our usual Friday trade. We put on 5-minute. No reaction at all. That's a very nice sort of stop in price as well to lead to a continuation of this breakout. Again, continuing that trade. Continuing that trade. No reason to keep, or no reason to exit that, the crossover of industrials and commodities there with steel. So if that, it gets us paid by Monday. Now, travel is making some moves here. I mean, it's hard to, again, it's hard to tell how much is volatility from this morning or actual bid here. I mean, it's at the, we're at the low end here again, so that's kind of the idea behind trading these over the weekend, but not an absolute. GE chart's very confusing. Still trading on our trend line here. Every time I think the candle can't get tighter here in terms of this consolidation, it does. This is I mean, this is just a great spot for this trade still. This is a great spot for it. It's hard not to look at that and say that's the point. It's not going any lower. Honeywell fined 13 million for sharing documents with China. Oh no. Not 13 million. Well, folks, what do we think? Not seeing any changes. We're just, it looks like now we're really starting to hang out because we had all that buying to bring us back and then now push us through the highs again. But now everyone's just now sitting, doing nothing. We've already put a lot of points on. I would love for nothing to happen at all. Just completely, just either just trend it or just sit completely flat, have no volume all day. The funny thing is we know no one's gonna exit long positions, so there's really gonna be no trading. It's either adding on positions or that's it. You do nothing. There's just market makers providing liquidity, right? I guess the dynamic here is to watch for is market makers. Whether or not mega caps catch bid off of contracts or not, we haven't really seen it recently. It would have needed to come from the gap here and then continue for that to be the case. But since everyone's holding the brakes right now, doesn't look like that's gonna happen. But I mean, it's not that far of a stretch. If something like Apple here continues to move, it's going to cause a gamma problem, and you're going to get a move here because again, these things do not add up very much. So it'd be very hard to imagine that anyone had volatility priced in, like market makers had volatility priced in a way that they were already hedged any contracts down here for like this 130 area. Like you're priced for 130, but you're not priced for like 131 up here and further. So we'll see if there's any buying related to that. And also the thing that we don't know is how how much what is the quantity of calls with anything related to sort of these Dow tickers and this value side. We don't know anything about that shit. And there's certainly an understanding that a lot of the option market is, again, dictating the pace of this underlying market, but how much on this value side does that actually affect that? It's not even close to the quantity of tech, right? It's just not even close. So, some of this, again, we know is just being added to portfolios, but we don't really know what it looks like if market makers buy the underlying on some of the value tickers, because it's usually just periodic orders by institutions buying it. But they would look the same. They would look exactly the same. They would give it a few hours, huh? Can't believe those numbers. Kind of remember when we were first getting the COVID numbers, and the numbers kept being, they were all screwed up in terms of, depending on when they were released, they would come out on like on a Thursday, but then they wouldn't have Thursday's numbers, and then that Thursday would be added to the next week's number, so it looked like it jumped up or went down, and we had all kinds of sort of variance on the data come out. Today almost reminds me of that a little bit, where we have just 2 days ago, we're getting reports that the hospitality sector is adding a ton of jobs, right? And then today we get the numbers, and it's like we're down. It's like it's very COVID like that we get these numbers that are just completely off. I guess consistent with earnings as well. Earnings numbers completely off. Like, oh yeah, there's no way. Yeah, UPS didn't deliver that many packages, and then it's like it's almost twice as many deliveries, and like these kind of things are just kind of. Where are we right now? This price action is very interesting. The bank side, the the very obvious buying right up to the close of yesterday, and now we're sitting right there. But there's still a lot of action in there. There's a lot of action going on. I mean, we're What are we doing, folks? What are we doing? If you didn't believe this shit wasn't bid, I mean, you're getting slapped in the face. Getting slapped in the face. Yeah. Yeah. The question is now. Here's the actual question. Is this open? Is this open? Just the orders that were going to be put on anyway? Is this just the order that was going to be put on anyway? And that's where, like I talked about yesterday, we had this idea of everything going on with the Dow and how it's going to probably be very consistent now. How much of this buying was literally just what was going to be here anyway? Like, did we opened up? We were going to open up lower, or again, we had this volatility that came in with the market. How much of it just said fuck it and just the orders are the exact same? It does look like that, doesn't it? Doesn't it look like this was just going to be here anyway? Like that's where we were already going. It's some of it. The only thing that looks like there was any reaction is again on this tech side, which got a bump from some of this data, I guess. But it's just a pre-market. It wasn't actual true inflow. So it looks like the whole fucking market just continued. Nothing. Everyone trading through the Dow, or at least trading through this exposure idea of using both sides, using derivatives buybacks. That's it. These other small software companies won't amount to any money, really. It won't add up to much money inflowing. It just they got to spread. It'll change up on the option side. It'll change, I guess, into the future a little bit if those get exercised. If they don't get exercised, then there's actual no gain, no value gained. Premiums, volatility gained. I can't wait to see what it looks like when we don't get a negative jobs report on Monday. That's what I'm actually excited for. If we closed right here, let's say, Monday, there's nothing for news coming out. I can't wait to see what it looks like on a normal, just kind of nominal trading day. Those same orders come in, like that kind of shit is what we're looking for and gonna get paid further and further on. It's gonna be different this time, boys. And it is different. There it is. It is different. Before, this would have fucking destroyed us. This would have destroyed us. When was, I think the last time we got what was the numbers we got? Where were the numbers that we got? Was it in January? We got something in it. We got all kinds of selling that happened. It might have been during September, some of this here that we got it, but we got destroyed. Today, business as usual. Dow's gonna be 35,000 next week, boys. We just got to 34. SPY? Remember when we were talking about SPY down here? We were talking about 420. That was just over a month ago. Talking about SPY 420. If it was a continuation of this trend here, well, here it is. We've been here for a little while. Yeah, we bought 400s just a month ago. We bought 400s. Here we are. And this is not like we were just here a week ago, but now we're obviously we're going somewhere else now. This is not, you know. You're in this area. You're in this area. We're breaking out of a consolidation here. That's in the differences here is that this is very different to break out of. That's like this whole thing with the Dow here. You're breaking out of a consolidation, but it's not your usual consolidation when you're actually pulling back and consolidating that price. You're just trading flat here. No one exited anything. We lost time. And that's where you know what's happening here. You lost time. You never broke a low, right? And so you're breaking out of that. That's a completely different thing than things like this, right? Where you start to add volatility, you start to pull back because you are consolidating prices, and then you come out of it. But you need to recapture some of those losses. And that's what causes more bid to come in, momentum. And this is just all on its own. You're an asshole all on your own, Dow, right? The dirty Dow. You're dirty all on your own. You didn't even need to roll in the mud. It's just dirty. It's completely dirty. There was no stopping, right? The only side that did was again on the tech side. Was it? We're only 2% away from all-time high on the Nasdaq as well. That's the index that's the furthest away, but that's called 2% on Apple, 2% on Microsoft, 2% on Google, all the megas. That's it. Tesla's that's a very nice candle again. But again, we're not too sure on this EV and clean energy thing still. And I don't know how. Here's the problem: is we're talking about portfolios wanting consistency. Excuse me, consistency and less volatility. Tesla's still volatile, but it's been removing some. It has been removing some volatility ever since being added. But still a question here, and there's the question of when we think about this idea of dividends and buybacks, Tesla is the least likely to do any of that because they don't have any fucking money. they they don't make money. They literally don't make money. They barely turn profit. So they have no cash. They have cash, but not buyback cash. Like they're not even it's not even a a question. We're talking 10 years maybe. Maybe they'll have cash. You look at the other mega caps, they've got Apple had 250 billion in cash in a fucking bank account. It's not even. It would take for fucking ever. Right? It would take forever. So this idea, you can see it. You can see the difference between who has the money and who doesn't, and that's a fundamental idea. But I think it is more technical. Still, when you think about it in theory of buying through, I mean, of course, dividends is a fundamental idea, and to continue your dividend, you need to have good fundamentals. But that's already a given, right? Those things are not going away; they're not going to change. And so, again, this is where it's the technical side that's going to actually allow for the ability to enter any of these and let these things actually happen. Because again, you're doing this for the consistent return, but you're doing it for the appreciation that comes. And if there's not room to appreciate for technical trend, no trend means no buy. T, why is T a good candidate for this? Consistent return. You don't want it to be going flat or down though. You want it to appreciate. It's got a lot of room. It's got a lot of room here. And it doesn't matter what the value is or anything like that. It doesn't matter fundamentally. It matters technically. Technically, it has room. And so if everyone's buying, it will increase here. Sizing's not big. A lot of reasons why this sector will consolidate. Energy, dividends, banks, dividends. Cash heavy. Welcome to 422 SPY. Yeah. This trend line comes in about 423. Gold's up almost 1.5%. Dollar is breaking back down, so you can see how the bond market has switched over now. It's switching over. And you can't tell on the yields very much yet, but switching over. Back to where we started. A lot of buying. What are we on Europe continues to trend. Europe's also at all-time high, right? We're actually at all-time high on all markets besides Hong Kong, right? Everyone else is all-time high as well. It's important to remember that. Yeah, the whole equity space around the world is doing very well. And again, this is due to volatility being pushed to the bond side, especially in Europe, right? Europe is like they're having all kinds of. They tried to copy the Fed, and then they don't have the same spending, so then it's like everyone has to ask Germany to take care of the problem. And yeah, we'll see how that goes. Definitely equities are bullish, so and that's what makes the whole this whole space it makes it a head scratcher. What is exactly happening over? It's very strange. It is very strange. I mean, you can just say that all of this demand is going to our market, right? Which is fine. The money's coming here, yes. But this is not a bad uh it's not a bad long-term trade or anything like that. It's not like you can't put this into I mean, the numbers are great over there. Like it's just it's not even close to ours, right? The output is just it's insane. When your GDP grows 12% in a fucking quarter, like, you know, that's the whole different beast, right? When you're already the largest economy anyway, right? So, we're I guess if your economy is doing bad, you're doing better in the equity market. Is our takeaway so far, right? More deaths, yes. Less jobs, less jobs. Just keep climbing and climbing. How many of you get this Tupperware play? You got lucky on this one, huh? That's a that's probably from when we looked at it at the low yesterday. It's pretty close to just taking profit here and waiting to enter closer towards close and then take the trade for over the weekend. It's pretty close. I I think I'm going to just sit here, but I think it's probably the right decision. You just take the profit from if you entered anywhere from this whole thing, this whole mess. Even if you entered from support here, I would take the profit right here and re-enter. Buy something else for cheaper. A little bit more risk for over the weekend. All good. Take the money. Things like this. Anything that you got. If any of you had any of these stickers that just put a bunch of points on for basically no reason today, because of some volatility from news, I would just take it. Just take it. Whatever it is. Anything. I would just take it. Take the money. Some of you might have bought Square Inc. and things like that from the earnings. Take the profit. Some of you might have bought Z. I would just before close, take that home and put something else cheaper on. Right? Maybe put the cost basis back in, or just take profit on everything up to your cost basis, whatever it is, right? And then just keep pushing that amount. Because again, some of this is you have literally no clue now on some of these. Because now we've broken this trend from a random it is kind of a random event that wasn't priced in. And so some of these, again, the pricing is probably completely off. It's completely off. And that's where, how do you start a trend on something that was not correct to begin with? You have to correct it. And so you need to consolidate it. And that's where some of these growth tickers, that these software companies and things that were getting beat up constantly here, they're going to need to consolidate this move. If you don't think they're going to consolidate, then keep pushing if you want. But some of these are not, they're not going to just come bounce back for no reason. That's just because job numbers are not going to bounce back, right? It's sort of a no, not so much of a seesaw here as some voodoo, some lucky. Commodities are so funny. We just keep fucking rallying nonstop. By the way, this BlackBerry move is great. But to blow through 860, we'll see how it does through all these. This is again just price action, silly. I trust this downtrend a little bit more. We'll find out how long we can do this today. How long this continues. Again, I think this is going to be like a monthly thing here going into the second half of the year here. This sort of trend that we're on, I've already been talking about this for a while anyway, not just from yesterday's discussion, but be interesting to see how much continues. Let's honestly, let's just take a break here. I don't really want to get too into and far beyond what we've talked about from yesterday and what we've seen so far. It's a continuation of what we've seen, right? We have a very good understanding of what's going on, and it's funny that the point was proven so quickly that as soon as there's an event here that should throw things off, everything continued anyway. And I think that's probably the best proof you can get of an idea is when it just smacks you in the face and then things continue just as you would expect them to, because again, you're using sort of both sides of the coin here in the equity market to be able to push through these things, and it feedback loops itself, right? Where as soon as you're talking about, well, now interest rates are not going to come back as quick, it pushes the tech side up, but that also is again coinciding with actually pushing value further. And none of these things really would happen unless, again, portfolios are being set up in this way and there's an inflow. All this is an inflow in the same orders being put through and not caring about what's happening. And I think banks, you can just look at this and just know. You can just know that this is buying buybacks. And that's where anytime there's weakness, you're going to get buying. And we've seen it everywhere, tech side, for mega caps that have cash and now value. So I don't really want to beat a dead horse here. So let's take a break. Maybe we'll come back a little earlier for close and see what exactly is going on. Talk about it a little bit to get set up for positioning a little bit more and everything else. But what an interesting day so far, and an interesting week and how things have been set up, right? I'll be curious if we get something. I'm sure someone's going to come out and say something about the numbers, so I wouldn't be surprised if we get some press conference or something later. Like somebody actually comes out and talks about the numbers or something. So definitely watch out for that and any volatility that creates. That would be like a bond market volatility that we'll see if it spills over. But otherwise, I mean, phenomenal. You gotta love it. You love to see it, right? You love to see it. If you're not in, you can buy. Okay, you just woke up. You can. There's nothing wrong with buying here anywhere, right? And again, I'd be trading through value and through the Dow, and then look to maybe put risk on through mega. I mean, mega caps are a part of that, but then looking for riskier things for over the weekend if you want. But it should not start with that, right? So otherwise, take a let's take a elongated break today, and I'll see you guys this afternoon. All right, have a good one.